Good evening, all. Ira Epstein of Linn & Associates with your metal market wrap-up for this Monday, the 21st of June, 2021, about 6:05 in the evening. So we had a bounce. It's about time, wouldn't you say, after these washouts we had. Dollar down. Most of the currencies were up today. We had a solid rally in stock indices. But after the size declines we had, what did you think? If you were looking this morning at Bollinger Bands, you saw that in most currencies you were under the lower band, had been a couple of days. Time for a bounce? Absolutely. Flip-flop in the dollar index. Then if you saw what was going on in bonds and notes, when I woke up we were around 138 in the 10-year. When I got back to shoot everything, and this was only an hour later after I was looking, we were over 1.4 and then 1.42, so the market was climbing. So what was going on? Well, nothing sinks forever. The market's now digested what the Fed is saying. Now all the little minions are out there. We've got the hawks coming out, and we have the doves coming out in the way of Mr. Kashari. And then we saw the New York Fed president. So Minneapolis, New York, they're all coming out and they're saying, no, wait a minute here. This is the transitory bounce. We see it. We don't know if it's going to last. Very different than Mr. Bullard was saying, of course. And you know, I think those are the things you got to pay attention to. Tomorrow, the Fed chair gets asked these questions on Congress, on Congressional Hill. Don't you want to watch that? I do. I want to see what he's saying. Remember, this was the man that just said that they were talking about when to taper. And then we heard from Mr. Bullard, no, that's nonsense. They're talking about tapering. Okay, which part of it's true? Who gets set straight? I think the market's looking for that too. When you take a look at gold, what do you see? I see a market battling at the 18-week moving average of closes. We talked about that recently. I said on the pullback, it'll be very interesting to see if this is where the market hangs in here. Ideally, what you don't want to do, this is ideal. The close here was 1767.70. Then you came up, and now you're falling back, right? You're at 1783.40. Last week's close was 1767.90. The reason I say that, you could make a double bottom and all of a sudden traders start looking at something like that, especially if you get back over 1787.90 and they go, wait a minute, that was a successful test of the closes on that type of chart. Just a thought. So then I look at gold itself. Do you really want to go short this kind of a break in the market? You might, this guy doesn't. And why? Well, first, the trend is down. Both of us, we have good vision. The market is under the 18-day average, which is making a race for the 200-day average now. And the market has now got 3 days in a row under the 100-day average. When you get under it like that on rallies, it often acts as resistance. So we'll see if that's the case and if these other levels become the case for resistance. Where's the Bollinger Band? Let me show you this. I'm going to get rid of even today. You had one Friday, Thursday. So Thursday and Friday you were under the Bollinger Band. Today you could have been, but the market started to rescue itself and it closed back over it and another day over it. So we're not pulling that chain anymore. The market's gotten a bounce from there and it's oversold. So we have an oversold market that had a vertical price drop, trying to get back to the sideways action, still has layers of resistance, but will you attract sellers in an oversold market? That's the very difficult part for this. I'm not convinced you will. When I look at the silver-gold ratio, or gold-silver, either way you want to call it, the market keeps hanging around the 18-day average of closes. It's just either side of it, not doing very much, and silver, like gold, had spent some time under these averages and flipped itself back into them. If we take a look, silver did a much better job of holding. It held the 200-day average. And if we take a look, this was Friday, today. You were under the number. Friday, you were, if you take a look at the numbers, you were under the lower Bollinger Band as well, 2596.90, and still way under it, obviously. And right here, you were at 2685, so you're over the Bollinger. No, it's right here, I'm sorry. So that's 3 days, and then you had 3 days in a row with today. Okay, and now you're moving to the right-hand side. What's my point in this? Whether it's 3, 4, you're extending it quite a bit. Go to your futures charts and count. You rarely get beyond 5. You move to the right-hand side. Now, can the bounce be a big bounce? It could be, but it generally isn't. Why? When a market doesn't like this, it's telling you a story. You've caught a group of people, and on the way up, generally those people are margin calls, the like, whatever. They want to cut their losses. They're wrong the market. The new buyers coming in are obviously bottom fishing because you can't say that the trend is up. In the copper market, it's the same type of thing. You were spinning around, you got to settle back over the right-hand side. Are we embedding? You don't count tonight because you don't know where the market's going to be, but we can count Monday settlement. Monday, both numbers were what? Under 20. Friday, both numbers under 20, but not Thursday. You need to do that tomorrow. So what does the market typically do? It typically doesn't embed. That's what's typical. You take a look, you'll see. On the downside, that's not been the case that we've been doing here. Market gets oversold and gives you a bounce. So the odds favor, just the odds, that the market's going to try to rally a bit more, maybe to the 100-day average and fight a battle there, but try not to embed. If it embeds until that's lost, the market's going to have a lot of overhead resistance. Lose it, and then you say, there's a momentum shift and you're coming back up. Either way, people that have experience, you're going, it was 459.50 just over a week and a half ago. It just hit 408.80. The market's being kind. It wants me to go short at 417.85. Where would I put a stop? Back over that high? You don't attract the shorts. Platinum's the same thing. Will we embed? So you can't count tonight, but you can count Monday. You go to Friday, now you know it's not going to embed the day before. I can just show you the number. So we're back into the same game there. In the palladium market, well, you spun back to the upside, just oversold. Not a trend. You got a higher high, lower low, but we have these vertical price drops off the Fed. We all know what happened there. And in the dollar, if we take a look and we come back right over here, day one of over the upper Bollinger Band, that's Wednesday. Thursday, Friday. Okay, that gives the market, the way that I teach the counting of this, a 2% chance of staying over the upper Bollinger Band today. Why? I count each consecutive close as taking away one of those 5 percentage points. And of course, there could be times when it's more than 5, and I just throw that out the window. I'm also not looking for a top. This is again a sign of strength, but I am looking for pullbacks, and that's exactly what the market is providing in an overbought condition. Then we get to Ethereum. Now, as you know, the Chinese government is definitely cracking down. Alipay today, and banks were told very simply, you're doing no business transactions to deal with cryptos. None. Game is over. They're not allowing mining. If you're mining somewhere, they look at the electricity usage, they're stopping that. So what you've really done in these markets in a very short period of time is from the month of May, when you got up near 4,400 plus, you've taken the market back down to right now 1,900. So that's one heck of a drop. It's over 50% in the market, and Bitcoin is also getting itself smashed. Traders will say, well, this is a good washout. Others, as a chartist, I don't know that this market's over right here. It's building momentum on the downside. I'd like to see it lose it, but what if it embeds? That's just going to tell you another level to the downside. Now, it has not been able to embed recently. So that's the good news for those that are getting nervous here. If the market embeds, a different game, but if it doesn't and it's just in the beginning stage, then we'll see what happens. This coming Wednesday, mark your calendar, Wednesday, that's the 23rd, I'm having my What's Up live webinar. You're invited. To join, just click. You'll see an icon up here. I'll leave it on throughout the whole show. Just click that, sign up. You go, you'll get the instructions, your password. There is no charge. Bring your spider ETF, futures questions. I'll answer everything as fast as I can. They typically last 20 minutes and it's a lot of fun. I sort of screwed up the last one. Some people couldn't see the show. I forgot to hit a button. That won't happen again. I'm pissed at myself. And I want to do several of these, at least 2 of these at times during the week, 1 always. That's what I'm trying to do unless I'm on vacation. So this week it's going to be this coming Wednesday. I picked that. You've all given me choices. You know, you've answered a lot of my survey questions, and it appears Wednesday and Thursdays are the days you like the most, which makes it hard to run them back to back. I don't see the advantage. Remember, I do not post these. You either attend or you miss them. But I'll answer your questions, get this fun, and away we go. Doesn't cost you anything, so if you don't know how to get in, call us at 866-973-2077. Just click here. That's your invite. I'm Ira. You have a good day.